The future of first-time buyers are at jeopardy. And if you are ready to pull the trigger and looking at buying your first property in the next number of months or even years, you are in the right place. The first thing that I want to talk about is how did we even get here in this first place? So the first thing is home values are increasing. Now I'm in Calgary, Alberta, and for us, for the last number of 5-10 years, we've kind of have up and down markets. In the last 5 years, we haven't had increased prices in the properties. Now I know in other areas of the country, they've been constantly seeing upward pressure on prices of homes. And we're starting to feel it too. And that's why I'm realizing how worried I am for first-time buyers, for you as you're buying your first house. The second thing is interest rates are starting to climb, all right? If you can see this chart here, this is a chart I found on a website from a mortgage company, and they're talking about potential forecasting of interest rates. So by the end of 2023, they are saying that the maximum number we could see is about 4%, all right? And the minimum is about 3.34% on 5-year fixed products. Now, I think this might be a little bit low because this is the number they projected. 3.08 was the average by the end of right now, Q1 of 2022. Well, we're already seeing a lot of 3.4 type % products already on the market. And so this number over here, we could end up easily seeing 4+% when we get into that market. All right. So interest rates are rising. Now, this is also causing a lot of that to happen. The third thing, and this has surprised me, is that the investors' share of the market has grown quite a bit. And I was a little bit surprised by this when I found this, and I think this was from the Bank of Canada in a study they did. And when you look at this is home purchases by first-time buyers, repeat buyers, and investors have historically moved in tandem, right? So they usually have. So you can see right here, all through here, this is kind of always worked together. But what's happened, and this is now 2020, and so when we came out of COVID times, basically there was a gap that started happening. The investors, repeat buyers, and first-time buyers. There is a gap. And so this is causing a lot of problems in the market. So investors are great to have. They're fantastic. But if there's too many, what is that balance of having too many investors? Because we need them for inventory, for rental properties, and all that as well as landlords. But what is that fine balance of too many investors buying properties versus homeowners? I don't know the answer. I'm just posing this question because I don't know the answer. If you know the answer, comment below or battle it out below because I don't know that answer. What I do know is as the first-time buyers are getting squeezed out of the market here because more investors are buying. And why is that happening? Well, in Calgary right now, we're seeing a lot of investors coming to Calgary and buying property because it's a lot cheaper than it is out there, right? And so home equity, that is the word. The word of the day is home equity. They have seen their homes increase in value. So let's say if this investor, Mr. Jones, the investor, has 3 properties, and Mrs. Jones has 3 properties as well. So combined, this brother, sister, whoever, these 2 people have 6 properties. And if all of these properties go up in value, now they have all this equity to play with. They might say, hey, you know what, between these 3 properties on my side, I've got $175 or $200 or $300,000 of equity that we can now use to do something else. And same on the other side. Well, now we've got $500,000, $600,000, $700,000 that we can go and start buying other properties in other places. This is, I think, why we're seeing this happening. And that makes it a lot harder for these first-time buyers like you in this market because you're competing against, some pretty savvy buyers. They aren't the first-time buyers, right? They're repeat buyers. They are buyers that have already owned a house. They've gone through the process. They're investors who they're not really emotionally playing the game. They're just buying based on numbers, and they're willing to pay more if they can rent it for more, right? So FOMO, I feel it for you, and it's real, right? The other thing with first-time buyers is down payment issues. So in this market, one of those things that you might have and you might be feeling as a first-time buyer is the fear of the properties increasing quicker and greater than how you can save for your down payment. Does that make sense? So what I mean by that is if the market goes from $500,000 to $600,000, you're not going to pay cash on that, right? You don't have to come up with an extra $100,000 to buy this house. Well, if you're putting 5% down, and that's, the minimum, but if you're putting 5% down right here, it actually is only a $5,000 increase. Now, not only, that's still $5,000, but it is a $5,000 increase. You've gone from $25,000 to $30,000 as a 5% down payment. Your closing costs are probably the same, all that kind of stuff, but your down payment is bigger. Now, the other scenario is what if you were planning on putting 15% down and now the home values are increasing and you are seeing, values of 100, 200,000, depending on where you are in the country, might be 50,000, but either way, you're seeing the values going up. You may not be able to save more and have to look at, now we can only put 12% down, or maybe we can only put 10% down. And that's real too. All of these scenarios, what do they equal? Increased monthly payments. That's what they equal. So regardless of any of these scenarios, your monthly payment is gonna change when values go up, okay? And that's the reality. The third thing that I have here, and again, I don't have answers. I'm not an investment person for you to take an investment advice from outside of real estate, but find a way to potentially future-proof your down payment. So find some investments, find a way to, instead of just keeping it all cash, is there some place that you can put it that can earn some interest on it, that can at least move it forward. Now, you want to make sure that it is liquid, that you can pull it out quickly, because you don't want it tied up in something that you can't get to. If you're using, a first-time buyer home plan, like an RSP first-time plan, you want to be able to know that you can pull that out quickly. So that's a pretty important part when it comes to this, if you're going to try to future-proof your down payment. But that is an idea that you may want to consider. All right. Through the link in our description, you can go to a page, or you can choose a time, book a call with us. It's 15-minute blocks, and have a conversation where we can help you through all of this. You, as a first-time buyer, how do you compete, right? Because we've got a lot of investors buying in this. We have a lot of repeat buyers, so people who have done this before, and then you guys, the first-time buyers. How do you compete with these savvy buyers in a market when, you're gonna be fighting for houses? Well, the first thing is know what your shopping budget is. Talk to your lender, talk to your mortgage broker, talk to your bank, and instead of, and this is what we tell our buyers here and our agents, is instead of looking at 50 houses and you're going shopping and looking at houses, take the same time and energy to make sure your lender and your broker has all of your documents. Get them all of the documents, because then you are set. You know how much you can fight for, how much you can spend. You know that you can have a letter from them that says you're pre-approved and ready to go. You can plan with them when you found the best house and you're gonna fight for it, okay? Do that, please do that for me, please, because that is probably the biggest way that you can compete, is having knowledge on your side, okay? And knowing what your shopping budget is. Second tip, shop 10 to 15% under your max budget. All right, so what I mean by that is, again, let's use a 600,000 number. So let's say if you are approved all the way to 600 and you feel comfortable and your monthly payments, all of that are okay up to 600,000. Well, don't go looking at houses that are listed at $600,000, because what's happening in this market? They're going for over that, right? All of a sudden, a house that's listed at 580, 590 is selling for 640, or sometimes even 7 in Calgary anyways. Like, we have some really big numbers that are swinging and changing things. So what you want to do is actually look at houses that are maybe in that 520 range. Because now, why? Now you can compete. You can compete. You can go and you can start looking at it and saying, okay, I actually can increase my offer. I can put a bigger over asking number down than just continuing to cause myself frustration and seeing a 590 house and writing 600 and being frustrated that I can't get it. Like, that's like the definition of insanity, is it not? Doing the same thing over and over and getting the same results and causing yourself problems. I don't think that's the actual real definition, but it's pretty close, because that would drive me crazy. If I was you, I would be so frustrated. I would be so exhausted in fighting for things that I just don't think you can get it. Because I know when I look at a house, when I'm moving and I find the house, man, I want it. I'm emotionally bought in. You can only do that so many times. Look at a property, fall in love with it, go see it, and try to win it and lose it. Like, that's hard. That is hard to do. So don't do that. So stop doing that. Start looking and fighting for the things you know you can win. And sometimes what that means, not only is it shopping 10 to 15% below your budget, it also means that you need to look at a different type of product. So if you're looking at, let's say you used to be looking at 1,900 square foot houses, and now you're priced out of that range and you don't have a house yet. Well, maybe you need to look at that 1,400 square foot house and make sure you have a finished basement. Or maybe it's finding a 1,700 square foot attached property, a townhouse, something bigger but attached, and it's less value. Proactively go and look for those types of product changes, because then that is going to allow you to win. Put yourself in a position that you can win. Don't just keep trying to do stuff and losing, because that's frustrating. All right. Now, third thing, have a letter ready. Have a template created, a letter to the seller. And if you've made it this far in the video, I want to give you a free tip here. We actually have a template for you. So I'm going to put it in the description, and I'm going to put a link here in the video, but you can go and you can download a template on how to write a really good letter to the seller from you as the buyer. And it's a guide that you can have, that you can download, you can use, and create your letter to the seller. This is big, and I know a lot of people do it. Actually, a lot less do it than you would think, because sometimes we can have 10 offers on a property and still only 1 or 2 people are taking the time to write a letter to get them to know, and it helps. It can help with the right seller. All right. And the last thing is, have an agent who knows how to hustle. What I mean by this is, if your real estate agent is simply writing an offer with you, submitting the offer, and waiting to hear back, that's not working in your best interest. You need an agent that works for you, that is reaching out to that listing agent saying, hey, how many offers do we have? Oh, I know we're an hour out. Like, they need to become the best friend of that listing agent. Here's an example. You know when you feel like you're sitting across the table from someone and it's like we're on different sides of the table? You need an agent that knows how to come around the table. Hey, buddy, let's do this together. I have a fantastic client. They are ready to go. They love this property. Please keep me in the loop. How many offers you get? Who else is writing those offers? And if you don't have an agent that is doing that for you, unfortunately, you're going to lose a lot of times before you finally win. And that is what you need. If you want that letter to the seller template, go into the description. You can download that. It's just enter your email address and you can download the guide. I know that the FOMO is real for first-time buyers. I am concerned because now we are starting to see it in Calgary, where a lot of other places around the country have seen it for a long time. If you have tips that you want to share with the community that watch these videos, put them in below. How did you win your house? How many offers did you have to go through? What was your experience like? What would you have done differently? Let's create an amazing thread and help each other out as we are fighting for these houses, because man, being a first-time buyer in this market is tough. So thank you for this, and I hope this is helpful. We'd love for you to subscribe and be a part of our community here, but we'll see you guys on the next video.